So picture this. You're in a small village in India. You buy something at a local shop, but there's no cash drawer.
Right.
No coins jingling around, no dusty ledger books sitting on the counter. The shopkeeper just, points to a piece of paper with a QR code. You scan it with your phone, and boom, you're done.
It's that simple.
Yeah. And today, we are welcoming you to this deep dive where we are unpacking how that tiny black and white square is just completely rewriting the rules of global finance. We're diving into a stack of notes and research titled The Digital Pulse, Reshaping India's Human Economy.
A fantastic source, by the way.
Oh, absolutely. And our mission today is to decode how the future of banking is moving far beyond, simple tech upgrades. We're looking at this radical shift toward an inclusive, completely human-centric economy. So, okay, let's unpack this. How does a simple scan of a code represent this massive leap that changes how we all interact with money?
Well, to really get that, you have to look at the context of where we're coming from. For centuries, right, finance has been defined by the physical limitations of paper and metal. Exactly, physical cash. If you wanted to move value, you had to literally move a physical object. But what we're going to explore today is this massive transition from those old traditional cash struggles all the way to future human benefits. We're looking at exactly how tools like UPI, AI, and even blockchain are fundamentally redefining financial trust and long-term stability.
Which is so interesting because the friction of traditional cash methods is just something we've just accepted it as baseline reality, right?
Yeah, like gravity.
Exactly. Cash is heavy. It gets lost. It requires security guards and armored trucks.
Yeah.
But the source material really emphasizes that this shift isn't just about, big banks saving money on logistics. It's grounded in these deeply personal stories of local entrepreneurship thriving.
Right, the human impact.
Yeah. Like, the notes highlight this one farmer. Before, they had to wait weeks to get paid, but now they receive money instantly after a sale, which saves massive amounts of time.
And that time is critical. Because historically, a farmer harvests a crop, right?
Yeah.
And they sell it to the distributor. But that distributor rarely has the physical cash on hand to pay for the entire harvest at once.
Right. They can't just hand over a briefcase of cash.
Exactly. So they issue an IOU or, a post-dated check. The farmer's left waiting. And that is a liquidity trap. They can't buy seeds. They can't repair equipment because their capital is it's locked up.
Stuck in the pipeline.
Right. But with digital access, that settlement is instant. The crop is sold, the QR code is scanned, and the money is there.
It's just wild. And there's another story in the text that really stood out to me. It's about a local village woman entrepreneur. And the notes say she's finally independent because she doesn't rely on physical cash or middlemen to run her business anymore.
Which is a huge deal. Because in a cash-based microeconomy, whoever holds the physical currency is the gatekeeper.
Right, the person actually moving the money.
Yeah, and they charge a toll for that access. Usually a local cash handler taking, say, a 5 or 10% cut just to move her money to a supplier in the city.
Right, just for liquidity and transport, that's 10% of her profit, just gone.
Exactly. But by shifting to a direct digital protocol, that middleman is just completely eliminated. She keeps that margin.
And then, you also have the rural shop owner mentioned in the source. They are experiencing tangible small business growth simply because a QR code allows them to serve more customers faster.
Oh, the speed factor is undeniable.
It really is. Like, if it takes 2 minutes to count coins and make change for every single customer, you have a hard mathematical limit on how many people you can serve in a day.
Right, the physical constraint of time.
Exactly. But a 2-second scan removes that bottleneck. You can serve twice as many people without needing to expand your physical store.
What's fascinating here is how the source material synthesizes these stories into 3 actionable ways digital banking improves daily financial management.
Okay, let's hear them.
First, you have instant liquidity and access to funds, like we saw with the farmer.
Right.
Second, the elimination of costly dependencies, so cutting out those middlemen for the entrepreneur. And third, operational scaling. The shopkeeper just serving more customers faster.
It really makes me think of the old cash system like a leaky pipe,
Yeah.
Where time, energy, and money are constantly being lost to these intermediaries, or just the physical limitation of counting coins, whereas digital access is like a high-speed, direct pipeline.
That's a great analogy, actually.
Thanks. But, so, if one farmer getting paid instantly fundamentally changes their life, What happens when you scale that up to millions of people simultaneously? I mean, you need a system that can handle the weight.
You really do. And the scale of this is just staggering. We are talking about bringing millions into the formal economy to create long-term financial stability.
Right.
Just look at the hard numbers from the source on India's UPI ecosystem. In March 2026 alone, there were 22.64 billion transactions
Wait. 22 billion in 1 month.
in one single month, totaling 29.53 lakh crore rupees in value.
Wow. Which is roughly, what, over 350 billion US dollars?
Easily. It's operating at a jaw-dropping global scale.
But wait, let me play devil's advocate for a second here. Isn't this just, a bunch of tech companies making our lives slightly more convenient? Like just another private app on our phones?
Oh, not at all. And that is a very common misconception. The IMF actually recognized UPI as the world's largest retail fast payment system by transaction volume. The crucial insight here is that India didn't just build an app. They turned digital payments into public infrastructure.
Oh, public infrastructure, not just a private convenience.
Exactly. Through UPI, mobile wallets, and direct digital access, they are actively lowering barriers. It's like a massive toll-free digital highway that any bank or app can connect to. And that inclusivity brings millions of previously unbanked people right into the formal economy.
Which is huge, because when you're invisible to the formal economy, you can't get a loan, you can't build credit.
Precisely. You have zero financial footprint.
Okay, but if I'm an urban professional, right? I'm used to things being fast and smart. But with tens of billions of transactions flying around, that sounds like an absolute playground for bad actors. How does a system this massive actually stay safe?
Well, you can't rely on human oversight at that scale. It's mathematically impossible. So there are these invisible shields protecting the digital economy.
Okay, what kind of shields?
First, you have the regulatory side. The text specifically notes that regulators, like the Reserve Bank of India, have implemented these strict RBI-backed frameworks. They're actively pushing stronger defenses against cyber risk and unauthorized transactions.
So making sure everyone on the highway is driving a safe car, basically.
Exactly. But static rules aren't enough for dynamic threats, and that's where the role of artificial intelligence comes in.
Yes, the AI aspect. The source highlights this as the next frontier of banking. But how exactly is it being used? Because usually AI just means a really annoying customer service chatbot.
Right, but the text breaks down a very specific dual purpose here. AI isn't just about automation. It is actively detecting fraud in real time.
Real time, like as the transaction is happening.
Milliseconds. It evaluates the context of your behavior. Say you buy a coffee in your neighborhood every morning. The AI knows that pattern. If 10 minutes later, someone tries to use your account to buy an expensive laptop halfway across the country.
The AI just blocks it because the physics of that sequence are impossible.
Exactly. And while it's doing that, it's simultaneously improving customer service by understanding your financial needs better.
It's really like an invisible digital immune system, just working at the speed of light to constantly learn, adapt, and neutralize financial threats before the user even realizes there was a risk.
That is exactly what it's doing.
Okay, so we have incredible speed, we have massive inclusivity, and we have real-time security. But what about absolute undeniable proof of where the money goes?
The traceability problem.
Yeah, because here's where it gets really interesting. People treat blockchain like it's a magic wand, right? They just throw the word around. But what is its actual job in making banking better?
It is so important to look past the hype. The source material is very clear on this. Emerging tools like blockchain have a very specific utility,
Which is?
improving traceability and settlement. Their actual job is to improve financial trust.
Traceability, meaning knowing exactly where the money went.
Yes, a blockchain creates an immutable shared record. It can't be secretly altered by a bad actor or lost if a centralized server goes down.
So it's like an unbreakable public receipt for every single transaction.
Exactly. It removes the need for third parties to verify things, which speeds everything up even more and guarantees trust. And, we connect this to the bigger picture.
Please do.
The real value of all these tools, UPI, AI, blockchain, always depends on one thing, whether they make finance more trustworthy, inclusive, and human. The real story isn't the technology itself. It's the people using it. As the text explicitly states, the future of banking isn't just digital, it's human.
That is just a perfect way to synthesize all of this, because we started with just that single shopkeeper scanning a QR code, right?
Yeah.
And we've traced that thread all the way up to billions of UPI transactions, real-time AI fraud detection, and blockchain
A
traceability.
complete systemic overhaul.
Right. And the ultimate takeaway from all these notes is that removing the friction of cash directly empowers individual human potential, whether it's the farmer, the shopkeeper, or the village entrepreneur.
Absolutely.
Well, I want to thank you, the listener, for joining us on this deep dive and taking the time to explore these insights with us today.
It's been a great discussion. And, based on the source's closing question about how technology is reshaping your financial journey, I'd like to leave you with a final thought to ponder.
Go for it.
As banking becomes completely invisible, operating quietly in the background via AI and blockchain to the point where friction is just zero, how will our actual emotional relationship with money change when we no longer have to hold it, count it, or worry about it?
Wow, that really is something to think about, just the psychology of invisible money.
Exactly.
Well, keep questioning the world around you, everyone, until the next deep dive.